All right, today is round 2 of bank earnings. Before the bell, we are going to hear from Dow component JPMorgan. Also, we're going to hear from Wells Fargo. Both are estimated to earn at least 20% more than a year ago. But this follows yesterday's disappointing numbers that we got from Citigroup on the revenue side anyway. What are the banks telling us about the economy? Dory, Wiley, Commerce Street Capital is with us. Good morning.
Good morning. How are you?
Good. Let's go back just if we're real quick to Citigroup, because we heard back from Citigroup and the revenue miss, a substantial miss. The stock really getting punished on that. Their issues were fixed income trading, currency trading, things like that. Is that kind of the story that we're going to hear from the other banks?
I think that may be pretty consistent. I think we're looking for two things from the banking sector. One, what's specific for that company, and two, what's specific to banking in general. Banking trades at a discount to the S&P. It's sold off. Citigroup, for example, have been down about 30%, so it had been hit pretty hard. So Citigroup had to come out and say, hey, look, we don't have a bunch of company-specific risk relative to banking that we should be punished this low. And I think that's why you saw the stock rebound yesterday. It doesn't have loan problems. Yeah. It had loan growth. It had deposit growth. And so having a miss on the investment banking side or the total revenue side wound up being, not as important as the health of the company and the banking sector.
All right. So that's interesting because the stock is up about 1% in the pre-market. Let's move to the big story this morning. That, of course, is JPMorgan. Dory. Jamie Dimon was on with Maria Bartiromo exclusively last week, and he talked about competition. A lot of these online, payment services could really be cutting into these banks. We might see that in the earnings today. Apple Pay, Amazon, everyone's coming up with different payment systems to compete with those large banks. Is that a concern for you? We're going to be listening for that today.
Well, yes, it is. But I think it gets back to the two things. What's a company-specific issue, and what's the banking theme as an overall proxy for the market? So JPMorgan has the most pressure of all the bank stocks, and maybe the most pressure of any stock, especially given the timing of its release. So all eyes are on JPMorgan this morning. Anything below 225 on the earnings is going to be disappointing. They need to be above 225. They've had a dozen quarters of beating earnings estimates. They've revised down a little bit to 221. So they need to be above 225. They need to show margin expansion. They need to show a little loan growth and deposit growth. And if they miss on revenues a little bit, that would be okay, but it sure would be nice if they hit it to the upside.
And real quick, you mentioned revenue. There is forecasted for Wells Fargo this morning a slight decrease in revenue as well. Are all the problems behind for Wells Fargo?
That's we don't know. That's a question for Wells Fargo. They've missed 3 out of 4 of their last earnings, so I don't use them as a proxy for the market. They're inconsistent. But they need to come up and step up to the plate and start being a little more predictable in what they're doing. I'm hoping that their recurring, non-recurring problems are behind them.
Dory, Wiley, thank you very much. I mispronounced your name at the beginning of the segment, but very interesting. You're actually going to wait for us to hear from the bank's numbers. Wow, that's a great take. It's going to be interesting to see what they have to say on the conference calls today, I think, in particular. Dory, thank you for getting up early with us. Please come back.
You're welcome.